Ladies and gentlemen, welcome to your favorite podcast. This is Real Estate Investor MBA.com. We created Real Estate Investor MBA to leverage the knowledge of giants through synthesizing and providing much needed information to all investors, from the veteran investor to the new and aspiring investor. At Real Estate Investor MBA, we plan to cover pertinent information head-on with our expert guests who we will interview on what they are doing and preparing for in the days and years ahead. We aim to create MBA quality curriculum topics and themes from the information garnered among our interviewed guests in order to bring world-class value to our fellow community of listeners. We truly believe that rising water raises all ships, and by sharing this leveraged knowledge, we can create a stronger online community, which translates to stronger local, regional, and national communities. Your hosts are Jeremy Moyer, who is a veteran real estate investor and author of a new book called Are You Playing the Real Estate Game Blind? As well as Tejas Gosai, the owner of eXp Realty, the Tejas Gosai team, and also co-manager in a newly formed Regulation D private equity fund called the Lehigh Valley Private Equity Fund. Now let's get to the show. Welcome to Lehigh Valley Private Equity Fund. Lehigh Valley Private Equity Fund is a Regulation D evergreen private fund designed to provide a 7% preferred return and an overall annualized target return of 12% through diversification in lending and acquisitions in the real estate industry. With over 100 years of combined real estate, investment, and management experience, our management team is actively sourcing opportunities and improving real estate in the Lehigh Valley and surrounding regions. The Lehigh Valley is booming. The private sector GDP is larger than 112 countries, standing at over $41.2 billion annually. Lehigh Valley Private Equity Fund uses three methods to create returns for our investors: qualified lending, buy and holds, and rehab resell projects. Our philosophy is simple: quality over quantity. Our primary goal is to protect our investors, and our strategy is to produce consistent high-yield returns. Thank you so much for visiting us. Contact us easily by visiting www.lvpefund.com or call us anytime 24/7 at 484-362-1313. Thank you so much and have a beautiful day. Hello, ladies and gentlemen. Welcome back to your favorite podcast. It's Real Estate Investor MBA. My partner Jeremy and I put together this program so that we could share all of the beautiful and sometimes unbeautiful news about real estate and what's going on in the market. We've had a very tumultuous year, but there's been a lot of benefits in real estate investing. We've seen with the stock market and different things like that. Some exciting news from Real Estate Investor MBA. We have finally hit a lot of different podcast dispatch networks. We are on iTunes, Spotify, Stitcher, iHeartRadio, TuneIn, Google Podcast, and we distribute the program on Facebook, LinkedIn, Instagram, and a few other resources. We have to say a big thank you to everyone that has made the program possible. And today we're doing our first panel discussion, which we have entitled the Titans of the Lehigh Valley. And who are the Titans? The bankers of the Lehigh Valley and the people that really keep our real estate engine moving. So with that being said, we have a great group of folks today. And first, we have the VP of Business Development at Embassy Bank. That's Mike Lahanas. Welcome, sir.
Thank you.
Next, we have Pete Reinke, who is the Assistant Vice President, Business Development at UniVest. Sorry, there we go. Thank you, Pete.
Yep.
Big supporter of the show. You're one of our first guests. Okay, and then also joining us from UniVest is Christine Walp, and she's the Senior Vice President, Commercial Real Estate. Thank you for being here.
Thank you for having me.
And last but definitely not least, a couple of bankers that my team and I have worked with, along with some of the other folks here. We call them the Mikes, but that's Michael Reis and Michael Santiago from First Keystone Community Bank. All right, guys, thank you all for being here.
Thank you.
Thank you.
So we're doing this program because we've had a lot of people from the higher end of the investment world and the lower end of the investment world. We've been getting emails with, hey, should we invest now? Should we wait? What's going on in the market? What's going to happen with interest rates? It's really difficult to kind of measure what's going on here. So let's start with the folks I introduced last. So Mike Reis and Mike Santiago. How do you tell someone how to perform, and what do you think they can kind of anticipate for this year, next year?
Well, we're telling people that this is a great time to get in the market. The rates are low. As far as values are climbing, so now would be a good time to get in before. We don't know what's going to happen in 2021, but I think it's a good time because also to offset the higher pricing, we do have the higher rents in the market now, so it allows a little bit more expensive property to cash flow a lot easier. As far as rates go, of course, like I said, they're extremely low, very attractive, and we are, just our bank. Mike and I are nonstop right now, so I think everybody has the same thoughts on now's the time to get in. If you're planning to get in.
Yeah, and I would just add to that too, in talking to some of the investors and some of the borrowers we talked to, to also take a look at how strong Lehigh Valley from an economic perspective has been performing, right? So, further backing up the stronger rents, there's, good economic sense behind that that's driving it. On the cautionary tale, on the conservative side, then we always make sure that the borrowers understand and have, ample reserves and liquidity, as it just in case it's a fail-safe. That's something I look forward to seeing, when I'm reviewing their financials as well. Continuing to maintain that and also building reserves going forward.
And what's also been positive through COVID that, both our customers really weren't that affected. They didn't have the people that didn't pay the rents. We had no problem people making their payments on time. They're always collecting the rents. There might have been some slow pay, but I think they're all 100% now. So it's really great for the investor at this time.
Awesome, thanks, Mike. And Mike, Christine, anything to add or address?
So I'm echoing, the benefits of what's going on in our economy. I think that for the Lehigh Valley, we've been in a nice bubble compared to a lot of the national and larger regional areas. I think that we continue to see a lot of inflow of folks coming in, escaping from those larger cities and trying to find a place that they can work from home and be comfortable and still be able to have the resources to gather some of those things that they need on a personal level, as well as having opportunities to potentially move into the workforce in the Lehigh Valley. With our continuing growth of what we have on the warehouse market, industrial market, we've seen phenomenal economic growth in that world. And so I think that a lot of our folks on the smaller investor side, as well as on the larger investor side, have been benefiting from those different strategies. It's definitely a buyer's market, echoing, low rates, good rental incomes. On the smaller investor, I think as long as they are showing some good liquidity and good knowledge of how to place those reserves and keep those there, not necessarily take everything out and pull all that equity out. We're seeing very positive trends, and we're echoing again, we're very busy.
That's awesome. And Christine, you're on the commercial side, is that also like multifamily for you, or is that mainly? Okay.
Multifamily, MOB, retail, office, industrial, warehouse, big box,
Awesome.
everything in that world we play in.
It's great. Good to hear. And Pete Reinke, you were previously with Ashley Development and kind of in a different world. You must be seeing things differently now. How is it going?
Yeah, it's going great. The UniVest family has been so welcoming. It's great to be working with Christine so closely. And again, all three Mikes I've known for a long time, and it's just nice that UniVest is now entering the Lehigh Valley market more and more. And one thing that I've always loved about Embassy and First Keystone is their community aspect. We have that same community aspect. We're just not as known in the Lehigh Valley, and so we're trying to change that and pushing the collaborative efforts we have with the other lending institutions. But I echo what everybody else has said, that the market here has been good. There's some sectors I'm sure we'll get into that are not doing as well, but we're seeing a lot of activity with developers and with manufacturers and things of that nature.
And with you though, you've seen like different types of development recently too. We had a light winter, so we just have a lot of new stuff. How long have you been? When were you at Ashley? Was it over the past couple of years?
Yeah, I was with Ashley for 5 years. I just joined UniVest during COVID in July, so it's only been 4 months. So it was an interesting time to join, but again, the activity has been really strong.
Awesome, thank you. Thanks for that. And Mr. Lahanas.
Pretty much everything that Mike and Christine said. The Valley, for some reason, we're in this bubble that whatever happens nationally, we seem to not get the brunt of it. I know if you guys can look back in January, February, even early March, we were swamped early on. Then of course everybody had to do the PPPs for about 3-4 months, and now we're going through this forgiveness process that it's going to take us another 3 or 4 months to get through 5 months. But one thing that hasn't stopped is the investment properties. Anything single to 20 units, 5 units. Every time I turn around, there's another request for 5, 10. The problem, I know it's a buyer's market, but it's also a seller's market, and the buyers have to find these properties. It's very difficult to find a good property. The only thing I think, I can't say what UniVest does or First Keystone does, but one thing besides the liquidity and reserves that we tend to look at very closely is the cash flow in the building itself. I think we go to that first, then we go into the customer, and then to their credit and everything else. So, we don't do a lot of fixer-uppers. We don't like to do a 10 unit that's 9 units vacant. We did a couple hotels. If somebody's coming to us today to look for a hotel, it'd be a little difficult to get that through, because I'm sure their numbers aren't that, the 90 percentile that they've been looking for occupancy for the last 3, 4, 5, 6, 7 years. So the market, like I said, is good. Rates don't fluctuate as much as they do in residential. Residential, they'll go down to 2.5, and they'll go back up to 3, then go back down to 2.75. I think we're all steady in the 4%, someplace 4 to 4.5 on these investment properties. So, and knock on wood, like Mike and Mike said, we very few deferments, very few issues. Any issue that our investors had, they worked it out with their tenants, and they're back at it, buying it. Few new people coming in. Again, the newer ones, you have to be a little, they think it's nice to go out and buy these investment properties, but when they start having to fix them up a little bit, they fall a little bit short on cash and the maintenance that's required on these things. So the other thing that hit us a little bit, and we sort of got out of a few of them, is the college market, where huge investors owning 100 units around Lehigh or Lafayette, and private equity firms have come in and bought them out, like in January. So we don't know where that market now. Now it's a little tough. Everybody's leaving. I'm finding out all these colleges are closing up their. Muhlenberg was just this Saturday. Muhlenberg closed it up. They told all their kids to they got to move out by a certain time. So we'll see how that market picks up. Who knows? We're all hoping for the positive in the next 3-6 months, but we don't know where we're going to be in June. I don't know if anybody can predict it. So,
well, all of you guys are definitely on the money with a lot of the things that we've seen as well. And, you know, as a practicing real estate agent that has helped folks buy a few hundred units and sell a few hundred units, I was going to say that too, about the seller's market, because we're predominantly listing agents, and from our perspective, you know, everybody is calling to sell right now. You know, there's a lot of people that we have helped, you know, purchase a property, even in the last 2 years, that are like, hey, seems like the prices are really high. Is it time to sell? So, you know, we don't really. We're like, yeah, it's a seller's market. It's also a buyer's market if you can find the inventory. Really hard to find the inventory. So it's this kind of like mishmash right now where, well, you know, there's like an older generation that is kind of shifting out, a newer generation coming in. But the cool thing that I think all of you said is that we're insulated. And I don't think people outside of the Lehigh Valley, I almost say it in every one of our podcasts, like it's really hard to, you know, hear that and see what's going on in other states, and even states that are right across the border and a couple hours away. You know, we're seeing crazy things happen in New York, crazy stuff that scares everybody, and you don't know how to digest that information and then process it. So can we stick on that topic for a minute? I firmly do believe that the Lehigh Valley is insulated, and that's from a lot of previous work to get to where we are. And because we got to where we are, we can hopefully kind of stay insulated and make it through. Can we go back and just say why you think the Lehigh Valley is insulated, or what may make that a little bit more of a true statement? Mike's, how about we'll go back to you?
Well, as you know, as Mike said, it's the economy of the Lehigh Valley. We're just in a great location. You know, our GDP is over $40 billion. All the warehouses coming through. I'm sorry? 43?
It's over 43 now.
Oh, is it? See how quick it goes up?
Yeah.
And, you know, just a lot of financial companies are coming in. We're great for the warehouses because of the interstates. Even in 2008, you know, we were sort of protected from the you know, the foreclosures, like not like the other states, just got hit really hard, and the influx of people moving out of New York and New Jersey because of taxes or restrictions. There's a lot of money moving into this area, you know, investment wise, and people just relocating just to get out of those markets. So I think the Lehigh Valley is a very strong market economy.
Yeah, and I would agree with that. It's just the influx of opportunities that people are starting to find out in Lehigh Valley. Like you said, whether it's the distribution centers, giving people job opportunities out this way, or some of the other markets. Even to your point, Christine, not too far from here, they're not really seeing the growth that's driving that. And in terms of the real estate market that's driving demand, both from buyers on the residential side to also renters coming in just to get into the area. They got job opportunity. They got to rent first, and hopefully, then move out and buy their own home down the road. So I do think it has some legs. And it's starting to bring in not only the distribution center, warehousing jobs, the manufacturing opportunities, but we already have a great, healthcare, programs out in the valley with all the hospitals and the medical centers. And I think that's going to continue to drive it. But all these people are going to need services. So again, it should trickle down, where again, this is going to have some legs, I think, going forward. So I'm not too concerned in the near term. I think the long-term aspect.
For sure. Thanks for that. And I'll just reiterate what I was saying with the GDP part. I am a nerd, so I have been following this from 2016, which is when I moved to the Lehigh Valley and became a part of this beautiful place. But we were at a 38%
$8 billion GDP in 2017. And in 1 year, we went up just 1 billion, and we went from the 73rd largest economy in the country to the 65th. And now we're over 41, 42 billion. So, you know, just to tie that back together, like, you know, there's a very good orchestration of everybody, you know, keeping things moving, whether it's listing agents, bankers, buyers, keeping things going. So it's kind of like a perfect time, perfect place, actually the place. And what Mike was mentioning, the highways and byways, and, you know, we have 6 waterfronts for Allentown, Bethlehem Easton, a pretty one, and then the other one that will be developed at some point in the future. So Christine, have you seen that with some of your clients or your folks that, you know, they have a good outlook for the future here?
Yeah, so a lot of the folks that I'm talking to are the larger big box investors, as well as the larger apartment complexes and MOBs. So, you know, with our infrastructure that we have right now with the 78 corridor, having that infrastructure in place keeps us really well developed in order to have that transportation, and that's key for any market throughout the United States. So that's one huge factor that I think that we're so insulated because of our hub. And then you have all of these different marketplaces that can get to our big box. So you have Duke, the FedEx folks, you have Amazon, Majestic, all these large companies who have eyeballed basically the Lehigh Valley for different improvements to move in and start building some of these larger warehouses. And that inflow of these opportunities for our employees, or you know, the workforce that is coming in, and you now are starting to see some of those folks really come in from outside of this area, again, to escape the bigger cities, and also escape some of those taxes that they're kind of dealing with at this point. I think that one of the things that that has been beneficial overall for Pennsylvanians, as well as Lehigh Valley and people, is that we have been in this nice economic growth mode, and we're not seeing as many taxes come down on our workforce. So, you know, I was just talking to a client out in California, and she was sharing with me that her rents are just for a 900 or 850,000 square foot apartment. Her rent is almost $4,200. And then she, on top of that, almost 40% of her income goes to taxes, just because she's paying. So almost 80% of her income is going to different things just to survive. So she's actually looking to move east, and come back out to the east. And I don't know if she'll come to Lehigh Valley, but she is, and she is very common, in the sense of this is the conversation that we're having. So many of the folks coming from the West. The other thing I think that keeps us very insulated is there's so much growth opportunity we have going west of the Lehigh Valley. The Berks market is starting to really kind of come into its own, because of the corridor, as well as workforce is always key and very important. So I think we're going to continue to have our nice little bubble. I echo what everybody else was saying, that we do not and have not really experienced what so many of the other folks in this economy has felt. And it's nice to be able to lend here, to say that, you know, banks, I think, generally have not necessarily shut down their doors. I know our buckets, I'll reiterate, on like hotels and some retail spaces, it's challenging. We're always open to look at everything that we have, though. Any opportunity is always worth having a conversation to see what we can do. If there's anything we can merge with on any other of the assets, we're always open for conversation. I think that's the one thing Pete and I always talk about is having those conversations to get to know the folks, even if there's something that we can't do for them, it's always nice to hear their story, see where they're headed, see what opportunities are in the future for them, and be able to connect, because it's all about the communication and the connectivity of having those relationships.
Yeah, I mean, every day I get a call, or one of my teammates, we get a call like, would like to buy a property there. Do you know any bankers? Right? Like, do you know any bankers? And it's neat because I don't think we can take it for granted, right? Like we have the Valley, we have a good outlook. Don Cunningham and the Lehigh Valley Economic Development Group do a really good job of making sure, like for me personally, like we share a lot of that data with people. And what's sad is that we lost all the events and all those things that kind of kept it fun for a bit. Now it's Zooms and those kinds of things. But how has that? How has like the virtual world affected you? Like Pete, you're in business development. I think Mike, you are too. Like, have you guys been okay in prospering your network?
Pete?
So I would say that absolutely. There's a couple of things I wanted to touch on. Interesting you bring up Don and LVDC. Mike L knows this, but his colleague Jim Bartholomew was the chairman of LVDC during the time that I worked there. And at that time, we were just getting the warehouse developers out here. Now, due to COVID and other situations, it's almost like the logistics of people now, that people are escaping New York and New Jersey because of taxes, because of safety, and coming out to the Lehigh Valley. And yet, like goods themselves, they can get into New York. You can get into the airports. You can get into Wall Street. You can do all that stuff as needed, but you have the sort of flow of being out here. And the other thing that's interesting is that so many of these new outside people that are coming in that all five of us see, and they come in and they're used to working with somebody where they came from in their big city, and they come in there and say, we're going to work with some Lehigh Valley entities. And I think they're sometimes surprised, but they end up being impressed by the skill set and the abilities of the people that are always here. And we always kind of had the ability to play in that larger world. It's just people are continuing to find us now, I would say.
Yeah, they're seeking out. A lot of people are calling the Valley, right? Everybody's landing here now. It's like it's a beautiful wave, which will hopefully continue. Go ahead, Mike.
The only thing I can add is, I think Christine mentioned it. When I started banking back in '85, around '87, '88, I-78 opened up, and you could tell instantly that the traffic and the amount of people from Jersey and New York that had easy access to the Valley. I only know the housing at that time. I was looking to get married and buy a house, and it's a similar. You listed for 100, you buy for 150 if you're lucky to put a bid in, because a lot of times it was just a crazy market. So I think we're, if you look back at the history of the Lehigh Valley, every 10 years, this market seems to go higher. Then when you don't think it can go any higher, it goes higher. So the only other thing that since we're a Lehigh Valley bank, we try to keep 99% of our business in Lehigh Valley. We do get a lot of investors calling from New York and New Jersey, and we have a little trepidation there of lending to. You got to have something more than just we want to lend in the Lehigh Valley because we know it's a great market. Absentee landlords seem to be the only issues we always run into when we do have an issue with an investment property, being 1 unit, being 20 units. So we really have to look at that closely. And again, we talked earlier about the reserves and the strength of that person, plus the management company that they use in the Valley. Those are some of the keys that. But we get calls every day from New York, New Jersey. We saw you guys, your ratings. We saw this, we saw that. Our realtor gave us your name. It's like, well, yeah. So we look at them closely, and you got to really be safe.
You can lend to folks from out of state, but it's restricted.
We can, but we look at them. If I'm looking at Pete, I look at it one way. If I look at somebody from New York, with no intention of moving to the Valley, I got to look at it a different way. So yes, same thing with Philly. It's if you're coming up here, it's a different market, different people, different banks, different people that work in the banks. That
Yeah.
people are loyal. The clientele, the people, they're loyal to banks in this area. We're not, it's tough sometimes for an outside bank to come in and say they're going to dominate this market because the embassies, the First Keystones, hate to say it, the Wells, American Bank, the small bank, people are loyal to them. It's tough to get people to move from those unless you lock your doors and you got to make an appointment to come in to do your banking thing. You got to be careful. Some people get a little frustrated with that. So our doors are open, by the way. So don't.
Yeah,
Ours too.
There's other banks that aren't, but we're open.
Yeah, it better be.
We have to wear masks. So.
Hey, as Christine, as a follow-up question, you mentioned you work with some big boxes, and just like on a timeline issue, I'm sure, and I don't know how long you've been in the business. I'm assuming quite a while. But
longer than I like to admit.
How long does that process take? And I'm sure there's some big boxes that looked at doing something last year or this year, maybe just holding back. Can you share some of that?
Sure. I mean, the developer's timeline is very lengthy. It all depends upon where they're looking to build, what township, all those townships, and from a developer standpoint, they all have their own little rules as they follow. And PennDOT, given that kind of world, from a banking standpoint, once the developer has all of the approvals in place, the bank can move within the 45 to 60 days to close between all the different reports, et cetera. But it's a very lengthy process. I'm sure that, the folks that we're talking to right now, all those folks, their pipeline is 2 and 3 years out. So I could start having conversations now and may not look to close for 2 years. But as long as those conversations are in place and we keep connecting and they know that we're interested, that pipeline works through. Once in a while, I get lucky and I get a conversation with someone who's ready to go and it's in the ground and they have a tenant and they just got to start digging, so to speak, and that's a great opportunity to be able to finance that. But most of the time, the calls folks I talk to on the larger side, it's a 2-year process for me. Locally here, we've been very fortunate to be able to, in my pipeline, as well as former banks, I've been very fortunate to be able to work with some folks that have been loyal to me and follow me along, whichever bank I happen to be at. And so that's always a nice opportunity. But some of those folks, as you said, they're loyal to the banks, and those larger banks have deep pockets, so they'll be able to do the loans very easily because those things, the big boxes are very expensive, obviously.
So follow-up question. Well, kind of. Let's have the mics back in here. So there is a fear that a lot of investors have that we're getting notice of, like, hey, Valley is getting big and noticeable, and there's institutional players and bigger people coming, and what's going to happen to me? I want my 4-unit and my 10-unit. What do you say to folks like that? And do you think some institutional folks will be looking at the Valley in the next couple of years? Are they looking now? What do you think?
I'm sure they're out there, right? I mean, especially if you're looking at the institutional guys, right? They're going to follow the money and follow the opportunities. So if they're not on the radars, they probably will be. So to your point, in terms of will the institutional players look this way? Probably. I haven't seen it yet. Mostly, the clients we're dealing with, the MBA Community Bank, are, individuals. It might be, 2-3 member LLC, investors in that regard, but haven't seen interest directly from the institutional buyers directly, or haven't been hearing of it. There's been rumors out there that some of the bigger boys are looking around, but I haven't really heard of any transactions yet.
Sure. I think it's also just, there's a lot of, folks starting out that are, they're not able to perform right now. There's a lot of people that are putting in good offers for a 4-unit, 6-unit, 8-unit, and they're pretty wealthy folks, and they, are trying to get into the business, and they just, whether it's purchase price or someone comes in with an as is, it's just like there's a different world now than it was previously. It's harder to perform unless you're a big dog. That's kind of the conception out there. Mike Lahanas, what do you think?
Yeah, no, I agree. It's if you got the cash, you can do pretty much anything you want. But we look at the per unit values. We look at the market, the rents. We look at everything. So if somebody wants to pay, $300,000 for a $200,000 building, they're on their own. Sometimes they'll have to do it themselves because, we all want to have the 2020 Mercedes, but you can only get into the 2020 Toyota. You go with the Toyota. So it's a tough one. I mean, people will pay. People are paying. I'm talking investment and also residential. Some of the numbers I hear are just 50 offers. All over, asking 50,000, 75. I'm going, oh my God. My first reaction is, if they're going to buy it for 50, 75, how are they going to appraise it? And the guy goes, they're not. They're buying it for cash.
Yeah.
Gentlemen and Christine, they're telling me they're coming from New York and New Jersey and just they're selling what they have there and just buying what they have the cash to buy it.
Yeah, there's a lot of folks coming in with the on the commercial side, 1031 exchange.
Yep. Oh yes, yep. I forgot about that.
I'm seeing everything you can imagine with the 1031 exchange because they're getting premium. They're still getting fair market in the New Jersey, New York market because you have overseas folks coming in to take those and pick those up because they think they're getting them for a song. So it's a cycle that just continues and flows down to, again, the Lehigh Valley. And you have the New York investor coming in thinking that this has been phenomenal for him. And then, unfortunately, you have to kind of wheel it back a little bit and have him look really, truly what the cash flow is going to look like and help him understand or her understand what that cash flow is and what the bank is going to need in order for it to support itself. At the end of the day, you really want to help the client understand, what true cash flow looks like from a bank standpoint and educate them in order to make the deal work. There's a lot of lenders out there, I think, that are just booking loans because they need to book loans. And for UniVest, and I think the banks that right now that are on this podcast, it's very important for us to be able to educate our borrowers so they're making good, common sense decisions that will help them grow in the future when the future is tough. I always like to say I like to be there in the good times and the bad times in order to do any kind of lending for our clients. And those tough conversations happen even now with this inflow of folks that we're having come in, as well as when the tough time in 2008 when we were all seeing some issues. So it's I think it's important for them to understand what they're really walking into and help educate them to make common sense decisions.
Awesome. We are getting close to time. I was going to bring up the 1031 stuff. I'm very happy you did. And just to kind of explain that from my perspective a little bit, I have some folks that have called me and said, hey, we're coming from New York this weekend. We'd like to go shopping for a couple $1 million properties. And I can't make that up. It's like, we're coming, these two people, like, they were coming shopping. That was the description of, what they want to do. Even on the gas station front, there's a lot of folks from New Jersey because they pay at the pump and, costs are going up. They're just trading out gas stations to be in the Valley. It's a total, you can have one person there for a 24-hour period. Little things like that. And I think you guys really nailed it. And I would like to, in closing, say, I know some pretty personal, bankers that have done amazing things, but all of you guys I know are the better side of it because of what you're saying. You really do want to take on the client and become their best friend. And then in their worst nightmare, which could happen, you're in real estate, like, your banker's still your banker that is probably going to say, I told you so at some point, or you should have listened to me. Things like that, I think matter. So I appreciate everybody coming on, sharing information. And this is our first Titans of the Lehigh Valley piece. So we'll definitely keep in touch. We're going to share all of your information. And just to thank everybody, we've had Mike Lahanas from Embassy Bank, VP of Business Development, Pete Reinke, Assistant Vice President, Business Development Officer at UniVest, Christine Walp, Senior Vice President, Commercial Real Estate, Michael Reis, and Michael Santiago from First Keystone Community Bank. Thank you all for being here.
Thank you.
So much for having us.
Good night.
I
See you guys.
Take
Bye-bye.
care.
Take care.